Welcome to our deep dive on the EB-5 investment dilemma, focusing on the trade-off between faster immigration timelines in rural projects and the need to safeguard your capital. First, we will frame why rural projects have surged in demand. Then we will move into how to evaluate regional centers and project structures beyond marketing claims. Next, we will highlight due diligence priorities that directly impact both immigration outcomes and financial protection. Finally, we will examine fees, conflicts of interest, and the dual risks at the core of every EB-5 decision. Here is today's agenda. First, we will explain why rural set-asides have become a priority and how they affect visa timing. Next, we will discuss how to evaluate regional centers beyond branding. Then, we will walk through a due diligence checklist, followed by a clear look at fees and conflicts. After that, we will outline the dual risks in EB-5. We will also use diagrams to visualize decision flows and timelines. Finally, we will test your understanding with short quizzes. Before we proceed, please note this content is educational and not legal, financial, or investment advice. Your situation is unique, and you should consult a licensed immigration attorney, an independent economist, and qualified financial advisors. With that foundation set, let's transition into why rural projects have become so attractive. Rural projects are currently prioritized because set-aside categories allow many investors to bypass long queues faced by traditional or non-set-aside projects. This speed is a major driver for families who need predictability. However, it is critical to recognize that faster immigration processing does not inherently reduce financial risk. Therefore, we must balance immigration speed with the practical realities of project execution and capital protection. Now let's compare rural and urban contexts at a high level. On the rural side, the standout advantage is visa set-aside priority, which can translate into faster processing. Rural areas may also have less competition for certain developments. On the urban side, deeper markets and comparable properties can support stronger exit strategies, and job creation sources may be more diversified. However, urban projects might face longer backlogs, while rural projects can face location-specific challenges and volatility. This comparison sets the stage for why due diligence is essential, regardless of the setting. When evaluating regional centers, do not rely on branding or glossy marketing. Instead, focus on verifiable data. You should assess whether the regional center's incentives align with both immigration success and capital preservation. Because regional centers are intermediaries, their interest in deploying capital may not perfectly align with your interest in getting your money back. With that in mind, let's detail core due diligence areas. Your core due diligence should begin with immigration track record. Specifically, look for I-829 approvals and proof that prior investors received both permanent residency and their capital back. Initial petition acceptance is not enough. Next, evaluate the financial structure. Are you in a senior secured loan with collateral and rights, or are you taking equity risk? Then, scrutinize the exit strategy and exactly how repayment will occur. Third, examine the job creation model. Hire an independent economist and immigration attorney to validate the business plan and economic methodology. Fourth, rely on third-party validation such as market studies and developer financial reviews. Fifth, review the developer's track record for prior completions and cost control. Finally, confirm the presence of strong controls and covenants, including escrows, stage draws, collateral, intercreditor agreements, and clear default remedies. With the foundation set, let's convert this into a checklist you can use. This table translates the due diligence areas into actionable questions and names responsible reviewers. For immigration, verify I-829 approvals and capital return with an immigration attorney. For financial structure, confirm loan versus equity, collateral, and covenants with securities or finance counsel. For the exit strategy, test repayment sources and timing with a CPA or financial advisor. For job creation, ask an independent economist and immigration attorney to stress test the methodology. For market viability, obtain an independent market study. For the developer, assess completion history and cost overrun management similar to a lender's approach. For controls, confirm escrow, draw control, and default remedies with transactional counsel. Now let's turn the checklist into clear steps. Start by defining your goals and trade-offs. Next, request the full document set, including the private placement memorandum, agreements, business plan, and economic report. Then, retain independent experts, an immigration attorney, economist, CPA, and if needed, a construction consultant. Validate job creation assumptions and run sensitivity tests. Stress test the exit strategy by confirming multiple repayment paths and contingencies. Evaluate protective controls including escrow, collateral, covenants, and default remedies. Benchmark all fees and interest splits across several regional centers. Finally, make your decision only after you complete cross-comparisons and receive independent opinions. With the steps in place, let's visualize the decision flow. This flowchart walks from defining goals through document collection, independent reviews, stress testing both the job creation model and exit strategy, and then evaluating controls and fees before a decision node. If red flags emerge, the path loops back to more diligence or rejection. If green flags are present, you proceed to subscribe and file the I-526 East. The diagram highlights that rural set-asides can accelerate processing, but do not reduce financial risk. This pie chart illustrates the concept of dual risks in EB-5, immigration risk and financial risk. For demonstration, they are shown as equally weighted. Your personal weighting may differ, but the key principle is that both must be managed proactively through independent validation and strong project controls. This timeline traces the EB-5 journey from pre-investment diligence through subscription and filing, potential biometrics or RFEs, conditional green card issuance, and the sustainment period during construction or operations. It then proceeds to job creation measurement, the I-829 petition for removal of conditions, and finally capital repayment or exit. The placement underscores why planning around both immigration milestones and financial events is essential. Regional centers act as intermediaries and charge administrative fees and often take a portion of interest or profits. Because competition for investor capital is intense, some may present optimistic projections or gloss over risks. It is essential to demand full transparency and to compare fee structures across multiple offerings. Now, let's specify common fee pitfalls to watch for. Common pitfalls include high upfront administrative fees without ongoing service value, large interest spreads retained by the regional center that may not match the risk profile, and developer fees layered on top of regional center fees. Another issue is vague payoff waterfalls that obscure who is paid first at exit. Use a mini checklist to confirm the fee waterfall order, compare the net investor yield against the gross project rate, and request written disclosure of all third-party fees. With fees covered, we can now emphasize the dual risk warning. EB-5 involves dual risks. First is the financial risk of losing capital. Second is the immigration risk of failing to meet job creation requirements, which can lead to denial of permanent residency. Even though rural projects can accelerate immigration processing, they do not eliminate these risks. Consequently, the due diligence and controls we discussed are vital to manage both dimensions. Quiz time. Which milestone best demonstrates final immigration success for prior EB-5 investors? Option A, I-526 East Receipt Notice. Option B, I-526 East Approval. Option C, I-829 Approval with documented job creation and capital return. Option D, Project Groundbreaking. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is I-829 Approval with documented job creation and capital return. This represents the completion of the immigration objective and provides evidence that the project not only created jobs but also returned investor principal. Earlier milestones do not guarantee final success. Second quiz. Which structure generally offers more downside protection for investors? Option A, unsecured equity position. Option B, senior secured loan with collateral and covenants. Option C, revenue sharing equity without controls. Option D, convertible equity with no escrow. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is a senior secured loan with collateral and covenants. This structure commonly offers stronger contractual protections, priority in repayments, and clearer enforcement mechanisms compared to unsecured or loosely controlled equity structures. The key points are: rural set-asides accelerate processing but do not remove risk. Prioritize I-829 outcomes and capital return history. Independently stress test job creation and the exit strategy. Prefer stronger structures with collateral, covenants, and robust controls. Finally, interrogate fee structures and waterfalls, and compare terms across multiple regional centers. To wrap up, define your trade-off between speed and security at the start. Vet regional centers using verifiable data, not promotional materials. Hire independent professionals to validate both the job creation model and exit strategy. Analyze fees, controls, and worst-case scenarios. Make a decision only after you have cross-compared multiple offerings and documented your findings. Next, we will close with a reminder and a call to action. Thank you for watching. If you found this valuable, please like, share, and subscribe. We would love to hear your questions, experiences, and insights in the comments. Your engagement helps us create more practical, evidence-driven content on EB-5 investments.